guys, welcome back to LAGFX. Now today we're bringing you a brand new series. It's going to be our weekly analysis. So every Sunday you're going to see this video come out. It's going to show you how we're analysing our markets, why we're analysing the way we are, and our predictions for price in the coming week. The purpose of this video is to help you guys do the same, quite simply. To be able to look at your charts, see if you're looking at the same things. If so, brilliant. If not, maybe you can take a couple hints, a couple tips from what we're doing and help boost you as a trader. Now in this video, I wanted to make a nice introduction, and as a result, I've done a beautiful bit of analysis on the Euro US dollar. I've labelled and highlighted a lot of the things within the market, and I'll be taking you through a full top-down analysis. Within this top-down, you are going to see reasoning behind a lot of the moves in the market. I'm going to introduce to you a lot of knowledge, a lot of points that will be coming in the forthcoming educational videos. A lot of the things I mentioned, you're probably going to be unfamiliar about, but stay tuned, subscribe, hit the notifications, and make sure you don't miss out. So in future videos, you know exactly what we're talking about. Now, as with any market, I will always start with a top-down analysis. The reasoning I do this is that I can view the main structure of this market, so the structure created from the start, because we can begin to understand what price is wanting to do for the years coming forth. Now, we can see that a low has been set, as well as a high. So we have our high here, our low of the market here. Now straight away, we've broken that high, we've put in a higher high. Now again, we've set a low which is higher than the previous low. Already, if you know structure, you'll know, okay, this is bullish. Because we have this bias of the overall trend, we can begin to understand that it's likely for price to now begin creating longer term bullish structure here, until we can begin to trade up to this high, or at least to this range here. Now the reason I've drawn out this, which is a supply zone, is because it's the real last up move before a major down move. Now, as we know in some markets, it is going to be quite unlikely for price to come all the way up to our extreme highs or our extreme lows, just because it's quite an unstable number for that currency to end up at, which could result in quite bad and long-lasting effects to the economy. Now, of course, as we know, for these major moves to happen, we're typically looking at something economically really catalyzing that move. Now, of course, we've had recently with COVID, markets hit lows that we never thought they'd hit, but that was catalyzed by something major in the market, pulling confidence away from some currencies. So now we've talked about my longer term bias. It's for price to move up to this range and either find supply here or continue moving higher. Now that we know this, we can actually go into this structure, understanding that we want this structure to move higher longer term, and we can begin to see the structure within this move higher. Of course, no move is just a straight line. You know, we're going to find moves within that. You know, the fractal nature of the market says we see structure within structure. So within this move up, we're going to see a structure within that. Of course, within even those moves, we're going to see structure within there. That's just a little taster of the fractal nature of the market and what to expect. Now, as I move down, I've really zoomed in on this low set in the market, you know, that higher low I was talking about. Begin to see how price has started trading up since then. Now, the reason I've highlighted the highs and lows in this market is because I want to introduce to you something called Wyckoff's price cycles. Richard Demille Wyckoff, a trader from the early to mid 1900s, very knowledgeable in his field. Now, his theory, which is one minor subsection of his entire methodology, which is included within my third PDF in the Beating the Banks course. Now, what the price cycle basically states is that within our typical up and down movement of the market, we of course have to reverse. When we put a high in place, whether this be a higher high or a lower high, we have to reverse and come back lower to put in a low, which of course can be a lower low or a lower high. Dependent on that overall trend, whether it's bullish, bearish, doesn't matter, we're still going to see the price cycle. Now, when a low is set in the market, we will accumulate, which is one of 4 of Wyckoff's schematic. The reason we accumulate is to bring demand into the market we also need to exhaust what was the dominant supply. So we exhaust supply, introduce demand, which causes us to move upwards. Now, once we set our high in place, we will distribute. Again, the opposite. We are exhausting the once dominant demand and introducing supply. Now, this introduction of supply, of course, causes a move down. Again, we set in another low, we accumulate, exhaust the supply, bring in demand, so on and so forth. Now, moving on, this is our distribution here. Now, what's happened here is, of course, that we haven't actually broke this high. This is quite confusing because, of course, we want bullish structure. This may just mean that there wasn't enough demand to really blow through this high, and as a result, we're going to actually retrace in the scheme of things to regain enough demand to blow price through this high. Now, what I've done here is I've actually marked up this distribution, marked the events and the phases. Now, I'll go into a bit more depth of what a distribution is. To put it simply, it marks a stopping power of the uptrend and the creation of a downtrend. You may notice that from this region here, so from the up thrust in phase B, that is where we really start the new downtrend. So we've set the extreme high in the market, a lower high, a low, and what we've done is we've set a lower low and another lower high. If I move lower now, and we can start to begin to look in, so the last point of supply, that's referencing where the high's been set in the market. Now, you'll be able to tell evidently that this high, the highs in here, are a vast distance away from the last high that was put in place. This is promising because if supply is that much in control, it tells us we're ready to continue breaking down lower. Now, really zooming into phase E, you can see I've done some more boxes. Of course, the blue boxes being distributions and redistributions, the red boxes being accumulations and reaccumulations. Now, again, we're seeing another price cycle. This is something we, of course, saw on the weekly, but because of the fractal nature of the markets, we can see it on any time frame. Now, something I haven't mentioned up until now is that within these price cycles, we have redistributions and reaccumulations. Now, the point of these is that sometimes rather than a full retracement, so of course what we'd usually expect with structure is a move down, a move up, a move down, and then the reversal. Okay, of course the retracement come in to create a more efficient market as well as mitigating positions. Now, when we're seeing redistributions, this is a form of structure that is much more aggressive rather than your typical impulse retracement. Again, this is something I'll touch on more within my market structure videos. For now, just understand that what a redistribution is, it exhausts any demand that may have been introduced, so it makes sure that price cannot be pushed too far up, and as well as that, introduces even more supply to help price continue moving lower. Now, of course, this accumulation right at the bottom, the first out of the red, this was our previous low in the market. We've set an even lower low. From here, we've accumulated. Now, what this means is that it's very likely now that this is the next lower low we've put in place. Price isn't ready to come lower just yet until we make a wider scheme reversal, until we fulfill this price cycle and actually come back up to mitigate some of these positions. So I've marked out two here. In my eyes, these are the two most relevant to hold. These are the two areas where price is likely to trade up to now before putting in that next leg lower. Now, you may have noticed that so far I've given a few different biases, and that's because we have structure within structure. Now, the main structure I saw was bullish. Moving into that structure in more depth, we can see that shorter term it was bearish. You know, of course, that being this move down that we're looking for. And then as we peek even further into that structure and the more fractal nature of it, we can begin to see that even shorter term we're bullish. Now, we have to understand that this is always going to happen. You know, we have structure within structure, which means we're always going to have different biases the further we look into that structure. Because of the up and down move of the market, on every different time frame, we could be in a different stage of that Wyckoff price cycle. As an example is moving in just on where price is right now, we can see that we've got a price cycle within here, you know, an overbought stage of the market. We've set a high, come set a lower high, come to set an even lower low. We're seeing it everywhere. That is just the fractal nature. Sorry to interrupt the video, guys. I hope you've been enjoying the analysis so far and are picking some things up. I just wanted to include this little video here to tell you that if a lot of this information that's coming your way is confusing and you want to learn more about it, head over to the LAGFX website, go over to education, beating the banks, and this will give you a lovely rundown of what to expect from a course coming very soon. This has been in works for 6 to 8 months. I've been fine-tuning and finding every single bit of information out there possible to make sure that if you purchase this course, you will be a fully established, profitable trader in no time. If you're interested at all, please come onto the website, read through this. It will tell you everything about the course. It will give you added bonuses, everything you will gain from also purchasing the course, potential entry points, entry into our group chats, much, much more. So once again, sorry to interrupt the video, and I hope you enjoy the rest of the analysis. Now, of course, as stated, we set the low, we've accumulated, we've come up, we've reaccumulated again. This is the fourth out of the schematics I was talking about, which is basically where price, if a slight bit of supply enters a market, will manipulate some people out of the market, bring more demand in, and make sure that this trend is ready to continue. Again, because we're not seeing any major retracements, it represents quite an aggressive up move that we're looking at. Because of this and the assumption that it is an aggressive move, I want to see another reaccumulation here, and for phase C to take place in a reaccumulation, we need to see that spring. Now, we've had a lot of liquidity build up here, which means a lot of stops are going to be there, and the purpose of the reaccumulation is to do just that. As we see with this one, a lot of lows are made, a lot of liquidity is built up, and then we have that major manipulation, that major push through, which is our spring. You can see evident in this one. Our spring is that last and the lowest move that the market is going to take before we continue higher. Now, because of the liquidity build-up, I am expecting that spring to come quite soon, and I will want to try and buy into the bottom of that spring. So we will watch structure as it delivers. We'll wait for price to come down to here. Now, the spring is also going to fulfill the purpose of mitigating one of these positions. Now, it's very likely for price to actually come and mitigate our last spring. So we can see there's a major sell before buy candle in here, which we'll look for a mitigation of. I've set an alert just above, and hopefully when we do come to create that spring, I'll be pinged on this alert and be able to find a buy. Moving even lower, of course, we can trade everything in the market, so whilst we're waiting for this buy to take place, we can begin to look even more fractally. Now, into this move, we can see that within this reaccumulation, we are putting in a slight bit of bearish structure, or what seems to be bearish, where we are failing to create higher highs and actually creating lower highs. Now, like I said, with a reaccumulation, what this is showing us is that some supplies entered the market. The reason we need to reaccumulate is to bring more demand in so we can actually blow through these highs and continue with our bullish nature. The fact that price has been hesitant to really make a retracement, it's holding in a set range, tells us that we don't want to make a retracement and that we are ready to reaccumulate. This is how we use a range of different things, a range of different knowledge in confluence to get that bias and understand what the market's doing. Anyway, moving on, it'd be nice if we can try and find a sell from one of these unmitigated positions, one of these supply zones, just to sell into that spring so we can get a shorter term trade, a short term short, and then actually look to buy into our wider term move. Now, I apologize to anybody watching this. It's quite new to trading. This is a lot of information, a lot of things that you are probably unfamiliar with. I know this smart money concept and trading like the banks is quite unfamiliar to a lot of people. They don't understand what actually happens in the market and how we can use the information left over to create a brilliant trading strategy for us. The reason I wanted to include so much information was just to prove to you that we are going to have some brilliant videos coming in the future. I'm going to be making a lot of educational content, running over every single point I talked about. Now, all of these subsections are just tiny points within a massive strategy. So I'm going to be making videos on a lot of these things. So even our price cycles that we talked about, our Wyckoff schematics, the fractal nature of the market, liquidity builds up, market manipulation, supply and demand zones, how we draw them. That is just one of many. I wanted to give you a teaser of what all of this is in this video, as well as telling you what trades to expect in the coming week. So thank you everybody for watching through my analysis. I hope you've learned a thing or two and can take that away, put it into your own charts, and hopefully profit from these moves I've talked about. Now I'll pass you over to Luke, who's going to run through some of his own analysis, and I hope you enjoy that as well.
So jumping straight into things, the first pair I'll be analysing today is XAU USD, so that's the gold to the US dollar. And as we can see here, looking at the day time frame, we can see that there's nice bearish structure that's developed since the back end of August 2020. Now, straight away, what we are wanting to distinguish is the direction of the market. Now, there's a saying, trend is your friend, and I stick by that. So wherever or whatever I believe is the current trend, the current overall trend, and the direction of the market that I'm looking at, I will then look to place positions based on that. So as I've just said, it's looking bearish, so it's dominant to the sellers. So I'll be looking to place a sell. Yes, there'll be plenty of opportunities to place buy positions within this market, but just to be on the safe side, I'll be looking at sell positions for this pair. So breaking it down and going to the 4-hour time frame, we can see the bearish trend line that I've drawn out here in yellow, and we also have a supply zone here as well. Now, what's great about this analysis that I've done in this setup is our supply zone actually interlocks with our trend line. So that just gives us added confluence when price reaches this area, that if there is any kind of suggestion that it's going to reverse and the price is going to reverse, if there's any kind of confirmation of that, then we've got two things there that can back that. Now, reason being for this trend line that I've drawn out is we actually have two taps of this and clear reactions. So one here and then another one here. Now, realistically, to make it a strong trend line, we would be looking for that third tap, but two is good enough for me. And like I mentioned just before, we've got that added confluence with this supply zone here. We've had great reactions off this, and we can see that the direction of the market has changed once price has tapped into this zone. Below, we have a big level of demand, or as some people would call it, a support level. And this is just where price has rested on and again reacted to. So there's probably plenty of buy positions waiting to be activated here for the push up. And similar to this downward trend line, there's probably sell positions somewhere around this area. So breaking it down again and looking at smaller time frames, so this being the 1 hour, we can really get a gist to see what's been going on within the past few months. So as I said before, we've had clear reactions off the supply zone, and since coming down from having this big bearish drop, I like to call them bleed outs, we've struggled and we haven't been able to actually break this supply zone, which obviously again gives me added confidence that once we reach this supply zone, it's going to react the same way it has done previously. Now, if we just zoom in here, just for this month, we can see that the structure that XAU USD has produced has been very bullish. So there has been a lot of buying power, and it's pushed the price up. So for one, we need this to come to an end, and the bulls can only be in power for so long. On top of that, we've got our bearish trend line drawn out. We also have our supply zone drawn out, which it struggled to break above previous to this. So my prediction is we are going to get a push up and around to anywhere between 1832 and 1845, let's say. And once price reaches that, I will then be looking for any signals of a reversal, and that can be through candlestick formations. That's probably the clearest way to look at it, and the easiest way to see reversals. There are other things that you can implement, like tools and indicators, but I just like looking at the structure of the market and going off the structure of the market. I'm quite simplistic when it comes to my trades, and it works for me. So yeah, going back to my prediction, it will be a simple push up here. Now that could take a week, it could take a few days, who knows, but in order for me to place a position on this pair, I will be wanting to place a short. So that is my next goal, is to look for a short position, and hopefully it will be around, around this supply zone. Now, let's say price does exactly what I want it to, and I do place my position. Obviously, I'll want to be keeping my stop loss as short as possible, in order to get the best and make the most out of my trade. And then I'm really going to want to push my take profit as far as I believe it can go. So what I would be looking for is previous levels of demand, strong levels of demand. Where do I see the price falling down to before there being any kind of interruption? Now, for me, it's going to be around the 1760 area, just as we've had a lot of consolidation, and we have had, it has acted as a reversal point for the market. So, like I said, my entry would realistically be somewhere up here. That's as long as I get the right confirmation through candlesticks, and just down to volume and the structure of the market. And then my take profit would be somewhere around here. And then just keeping my stop loss as tight as possible. So again, it's just waiting for that entry and that confirmation. But my bias is definitely to place a short on XAUSD, as I believe the overall trend and the overall direction of the market is still very much bearish. If you guys have any other thoughts on XAU, if you believe that it's going a different direction, if you think there's any other ways of capitalizing on this pair beforehand, then please drop a comment below, and I'll be sure to read it. Okay, so now moving on to the second pair that I'm analyzing today for you guys. That's going to be the Great British Pound to the US dollar. So looking at the 1 day time frame, we can see that we've got a yellow line marked out here, and that basically just marks out the highest high that this pair has produced since this new trend has been set. Basically, looking down on the actual structure of the market, I believe, again, I am biased to a sell, as it's just producing us with a nice structure, producing us with lower highs and lower lows. So straight away, I will be looking to place a short position. And as you can see, I have also marked out the supply zone here and a demand zone here. So this was the last point that the price drove down to before pushing up once again. So I'll mark that out. And then this is the same for the supply zone. It's been the last point, the last high that it's made before producing the start, what seems to be the start of its next impulse down. So looking at the 4 hour time frame, we can really get a gist on how the price has moved over the last month or so. So we can see that price has been driven down, it's hit this demand zone, it's then generated a new trend, and price has then been pushed up. So just looking at the market, what I make sense of in my head is that bears have been in power, so there's been a lot of selling pressure here, which has forced the price to come down. Then what's happened is positions have been closed, those sell positions have been closed, and a lot of buy entries have been activated, which has just pushed the price back up. And now as price is coming back up to this previous supply zone, people are probably getting ready to place sell stops, and place those sell positions to try and drive that market back down again. And on top of that, people will be closing those buy positions. You've got to remember that these zones in the market and these areas in the market are there for a reason, because they have been used in the past as leverage to see where the price can go before there's any chance of any kind of reversal or interruption in trend. So as you can see, there has been a yellow dotted line that I've drawn out here. Now, reason being is I'm using that as a neckline. So in order for me to place a sell position on this, what I'll be looking for is for price to break through this and then continue, in a bearish manner. Now, if we just take a look at this at the 1 hour time frame, you can see how, this area that I've drawn out has actually been respected in the past. Price has pushed up to it, it's been rejected, it's pushed up to it again, and it's been thoroughly rejected, starting that big impulse down. Again here, it's been rejected. We've managed to have a break, and then it's been respected in terms of support for the buyers. We've then had the move up to our supply zone. So yeah, now what I'll be looking for is for price to probably hit this point, hopefully get a breakthrough. Now, I don't feel like it'll be a straightforward breakthrough, just as it has been heavily respected in the past. So I'll probably be looking for a break and retest. And all that does is just manipulate sellers. So people will be placing their short positions here. Price will then drive back up, and then they are led to believe that it's actually going to be the start of the next impulse up. So they'll either get stopped out of their positions or they'll close their entry. And then what will happen is price will then suddenly reverse and then take its move down. So similar to XAU USD, it's just going to have to be about patience, really waiting to see how the markets deliver and what happens. But for me, it will be a case of really breaking it down, looking at the 15-minute and the 30-minute time frame and trying to find their entry. So looking at candlestick formations that give me the confirmation that price is going to move down. So yeah, overall I am biased to a sell on this. Just another thing, as we can see here, we've had nice bullish structure, and then here we've had what some people would call consolidation. Prices has almost stayed within a zone, within an area, but I would like to look at it as distribution. Now, once price is distributed, you would then expect a big drop. So that just gives me another thing as confirmation. And again, like XAU USD, I will be wanting to keep my stop loss as tight as possible, and then ride down the price somewhere where there's been previous demand. So you could place a short take profit of here. So when price reaches here, you could close a third of your position and then ride another third down to this price, closing the second third, and then probably closing your third here. Now, whether price reaches that point within the next, week, 2 weeks, it just depends on the volatility in the market and if the market has any other plans. So just to play it safe, I'll be looking at stronger areas of demand. So it's probably somewhere around this point here where price is really settled and then taking its next push up. So probably around here is where I'll be looking to place my take profit. And then with my stop loss, like mentioned, I would want to keep it as small as possible. So as soon as I can get an entry with that candlestick confirmation, I will probably place my stop loss 8 to 10 pips above the candle that gives me that confirmation. Now, I know this analysis has been somewhat brief, but I hope you guys can understand and have understood what I've said and where I'm coming from. If you guys are wanting a more in-depth look on both of the pairs that I've analysed today, we will have a full rundown on this in our Learning Lounge group chat, which is on Telegram. We'll be putting the link in the description. It's completely free to join. Just click on the link as long as you have Telegram. Just join the chat and have a look at all the other things that we post in there as well. We're constantly pumping out educational content just to help those who are serious about learning about Forex. But yeah, I mean, I hope you enjoyed. If you guys have any questions, by all means, drop them in the comments below and we'll get back to you. If not, you can message us directly, or alternatively, you can actually book a call with us. Just go onto the website and book a call with us through there, and we'd be more than happy to accommodate to anyone's needs.